Well, guys, mortgage interest rates are at 7%. Prepare for 9 or 10% mortgage interest rates. The Fed is committed to raising interest rates, and we have to prepare for 3 or 4 years of pain. And that's the issue. Okay, so most people maybe are on board with me and says like, well, the real estate market is going to crash in a lot of these cities, whether it be Phoenix and Tucson. Phoenix and Tucson, like rental rates and the prices are still like very, very way out of whack. It's kind of interesting. I was looking at different cities, and it seems like even Sacramento really has not fallen that much from when I was looking at this stuff, 8 months ago, 9 months ago. And it's kind of interesting. So it's kind of like kept itself up, but a lot of times I think that people haven't really seen kind of the writing on the wall, so they haven't adjusted their pricing. Now in Boise, Idaho, I did see a particular property that was close to Boise State that they had reduced the rent per month basically by $800, and that was like a 22% reduction in what they had it for just 3 weeks ago. So I think that the people are wisening up. They need to kind of get some sort of cash flow back from some of these investment properties that they have acquired over the last year or two. On that particular one in Boise, that was actually a fairly new build that was constructed in 2001, essentially. So I'm seeing a lot of that rental rates, dropping the rent, dropping the rent, dropping the rent, trying to get somebody under contract as well. For the ones that are for sale, there's been a lot of price reductions on various things, but it hasn't really hit the comps because it's going to take 6 or 8 months, potentially even a year, for that all to kind of play out and kind of see where the damage has been done. Because in a situation where we had 2 to 4 weeks of inventory, you could quickly kind of get that comp on the record books. But now the inventory might be 6 to 8 months in a lot of these cities. So you're not going to see the comp come through for quite a while. So that'll be interesting. Now, we have to prepare once again for 3 or 4 years. So what's going to happen when this stuff starts to get shaky, and how could it not? If you're looking at gas prices are notching up quite a bit again in California and across the rest of the nation, but especially California. Premium gas is almost $7 a gallon again. And, kind of makes it tough to move around, and people are pressed for money. And, if you kind of notice, I've noticed this, and this is actually like an indicator that I use, and I've even noticed this with myself. When people aren't posting stuff on Instagram, a lot of times it's because they don't feel like they're in a good spot, or it's not the best kind of point of their life to like really kind of be posting something. So for instance, in my situation, a lot of you guys know because you followed me that I have this distal bicep tendon tear, and I'm still wearing this brace. Now, am I at peak strength of where I've been, let's say like a year ago or a year and a half ago, 2 years ago, where I'd maybe post a lift and it was like, hey, I cleaned 255 pounds, or I did this or that? The answer is no. I don't have that to post right now because I'm building back and I'm trying to recover from this injury. So let's say people are financially injured right now. They're not posting a lot of stuff. And I've noticed that people stopped posting on Instagram a lot. And I see some of the stories, and it might be very, very, very kind of surface level. And I mean, to some accord, it's like, okay, they kind of like maybe past the summer. So they maybe went on vacations and they kind of posted this and that of the beach, or they went here, there, and the other place. And then now things have kind of maybe more hit in the fall. So they don't maybe feel like they have as much to post. We'll see kind of through the rest of the year and stuff like that. But I just get this feeling that a lot of people are somewhat not in the best situation that maybe they were in even 6 months ago, a year and a half ago. So we'll kind of see how that plays out. But we have to prepare for the next 3 to 4 years. This is going to be a rough thing. And so the government will kick the can down the road, and the way they'll do that is there'll be various stimulus checks. Like a lot of states are sending out like a stimulus check. If you filed taxes with that particular state, they're kind of pumping a little bit of money back into the people to maybe help with gas prices, or just to kind of be this sort of cherry on top kind of thing to help people out, make them feel better, maybe win some votes over or something like that come election time. So You have to think a lot of the stuff that gets done is actually to win votes. For instance, with kind of the student debt situation, the student debt forgiveness, you have to understand that a lot of that is to garner votes. So 67% of the student loan debt is held by women. And that is probably a pretty quick way to get women's votes come election time, to relieve a bunch of student loan debt, and various other things, various other stimuluses and stuff like that. And it continues to kick the can down the road, kick the can down the road. Now, what's some of the things that they can do to kick the can down the road in real estate? I will not be surprised if they don't come out with the first time home buyers tax credit that was seen in the last housing crash. And we won't see that for another year and a half, 2 years. But once real estate collapses in a lot of these cities, then they'll try to incentivize some buying. And so maybe they do a first time home buyers tax credit, and they'll give people back money that they don't actually have to lend out, and just tack it on to the trillions and trillions and trillions of dollars worth of debt. Kicks the can down the road, and kind of appeases people and kind of gets things, a little bit of demand spurred back up. But as was seen in the last housing crash, when they did that, housing still went down, real estate still went down for another year and a half. So you had essentially, kind of the peaks, 05, 06 in places like Arizona. You didn't see the bottom until December of 2011. That's a long time, but let's just pretend like it's 4 years. Let's say the majority of the crash happened in 08. You didn't have bottoms till 2011. Assume 4 years. Some people say, well, that's 3, but the fall was already happening. It depends where in the year you're talking about, the beginning of the year versus the end of the year. But let's just say 3 to 4 years. So we have to assume 3 to 4 years of pain to get through the brunt of the fall. And what can kind of be done in the meantime, because you have to out earn kind of all the destruction. You have to kind of be able to level up when this stuff does fall. So I still think that there is an opportunity to buy way out of the money puts, because as the kind of mantra gets louder that, hey, this crash is happening, we're in this crash, it's falling, I told you so kind of thing. It's just going to get worse, and more people kind of dogpile on that and say, yeah, maybe that is true. Maybe that's just not negative speaking, that there is some sort of truth to that the economy is just going to implode. So out of the money puts, that's a potential way to play this. Obviously you could short the market in another fashion, just out and out, just take short positions on various stocks and stuff that you think are going to fall apart. And, whether that be the home builders, or whether that be, some of those iBuyers, Open Door and Zillow and stuff like that. But they've already taken quite a fall previously. We can expect more kind of thing as time goes on. It could be from car companies. They still have supply chain issues, and people are the demand's gonna maybe go way down on some of the new stuff. It's hard to say. It's really hard to say on that, because the supply issues do cause a restricted supply. Various different areas, just even like Target and Walmart's revenues have went way down. So, there's, it's just going to get worse. People are going to have to batten down the hatches even worse. But yeah, it is very, very strange of where oil prices are, and then suddenly where gas prices are, and we have all this shortage and stuff like that. So that is one particular way that you could play this. And then I think that cryptocurrency is going to go into this extended bear market. The long tail is going to be very, very vicious, and it's going to press out a lot of the kind of lower market cap stuff, because they essentially won't have enough funding to continue. So you have to account for 3 or 4 years. And a lot of people are still in this kind of anger denial stage, just with real estate, crypto, all this kind of stuff, because they're invested in it, and then they feel gypped, or they're pissed off of just kind of the situation at hand. And it's kind of you just got to kind of react to the situation. at hand and keep moving forward. And really all we can do is just try to position ourselves to actually benefit during the decline and continue to stack during that. Because if you're like, well, okay, when this all collapses and then I'm going to swoop up and buy properties, well, if you don't have any money to buy properties, or you're not making money in that meantime, in that 3 or 4 years, then you're not going to be in position to take advantage of it when it comes back. So you got to be in position. So, you know, just kind of battening down the hatches and trying to earn as much as you can is really about all you can do. And you got to earn on the decline. You have to earn on the decline. And then the unfortunate thing is that you're going to have to try to profit off of other people's pain. That's just how these markets work. So just don't be the one getting crushed. Anyway, guys, go ahead and leave a comment below if you've seen real estate crashing in your market, whether that's in the United States or whether that is abroad. And follow me on all social media at Brian Phobos, YouTube, Instagram, Steam, Twitter, Hive, etc. See you guys.